one stock that's in focus in today's trading session actually, Gaurav, and that's in fact bleeding in trade as Avenue Supermart, or as we all know it, D-Mart. I believe it's a Q2 earnings, but what did the Q2 earnings actually throw out that the stock is under pressure?
Well, yes. When we talk about Q2 earnings for Avenue Supermart, which is also known as D-Mart, what has happened is that when we talk about revenue, that was actually in line, that increased almost by 14%. But when we talk about EBITDA, there we saw an uptick of around 10%, which was a little below Street's expectation. And coming to profitability, that increased almost by 7.5%, which was again lower than what the Street was expecting. So overall, the results were below Street's expectation. That was one thing. What has happened in this quarter is that the OPEX have gone up, and that is the reason why we saw some pressure in EBITDA margin. And that is one area of concern where the Street is concerned. And the second area is D-Mart ready. So what management has also said that the increasing penetration of online quick commerce is actually hurting these stocks, because when we talk about the like-to-like revenue growth for like-to-like store revenue growth for D-Mart, that was at 5.5%. That is one drawback which Street is seeing in D-Mart. And lastly, when we talk about D-Mart ready, which is its online chain, there we saw a growth of around 22%, which was lower than what we have seen in FY24, which was at around 30% level. So these two areas are actually concerning the Street. And on back of this, we also saw brokerages being a little pessimistic on the stock. So we have JP Morgan, who downgraded the rating and also cut the target price. They are saying that like-for-like moderation and high cost is actually weighing in Q2 results, and they are also concerned about the quick commerce and its impact on the business. When we talk about Morgan Stanley, there also we saw cut in the rating as well as target price, because they are also saying that the commentary from the company where they are confident about 20% growth is likely to be impacted because of the quick commerce. And lastly, Nuvama also, while maintaining hold rating, cut the target price for the stock because they are also concerned about the quick commerce segment. So definitely that is something which is weighing in on the stock right now. It is down almost 8%, but definitely watching out on what happens in D-Mart and how it pans out for investors in coming quarters.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.